Tuesday, March 29th, 2022, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look to the Far East, to the land of the rising sun, or Japan, to see whether the Bank of Japan can bail out the world. It does sound exaggerated. Believe me, it's not. Before I start, though, I'd like to say I did a video about a week ago about this subject. It was entitled Yen Carry Trade, Keeping Risk Assets Afloat for Now. And yesterday as well, when I was doing my video, I did notice that the yen was dropping quite precipitously. And we also noticed that yields were spiking quite high. Not only treasury yields, but JGB yields. And I'm gonna also recommend a very good video that one of you on Twitter recommended to me yesterday because I spoke about Japan. And it's by a young guy in Japan called Weston Nakamura. He does reports for Real Vision Finance. And on February 10th, 2022, he spoke about this subject. And I have talked about the yen carry trade for many years. And the yen carry trade basically is the Bank of Japan printing loads of money while the banks in the West, like the Fed, the ECB, and the Bank of England, kind of go on a tightening cycle, because Japan, the Bank of Japan, is the granddaddy of this crazy monetary policy that we've had since '08 of QE, zero rates, negative rates. The Bank of Japan has been doing this for much longer than anyone else. And right now, with the Western central banks actually reversing this crazy policy or trying to reverse it, the Bank of Japan is the only bank left that is still accommodating. And so they hold the key also for us, for the whole Western financial system. Up until recently, they didn't, because all the other central banks were going along with this crazy policy. So the yen carry trade hadn't been as important, let's say, since 2019. But it definitely was when you had the implementation of Abenomics back in around 2014, 2015. At the time, the Federal Reserve was reversing its very loose monetary policy that it had after the '08 crisis, and Japan came to help again, and it looks like they could do that again now. But I recommend this video. Weston Nakamura, I have contacted him. He has replied to me. I really want to get him on and talk to me so you could listen to him as well. He's in Tokyo. He knows a lot more what's going on there with the Bank of Japan, with the economy, than I do. But hopefully I'll have him on soon. The video is why global markets are addicted to the Bank of Japan. And many people don't think the Bank of Japan is that important, but Weston Nakamura talks about this and why that's not so. It is very important. And even going back to the collapse of the Nikkei in the late 80s, early 90s, the collapse of the real estate and the banking sector in Japan, the West was always critical. I remember very well, people even in the mainstream economics profession or in the markets in which I was, kept saying, why is Japan bailing out the banks? They need to let the banks collapse. They need to let the recession take hold so they can recover. And the Japanese never did that. But we've been doing the same thing. So what's going on now is that the bond markets in the West are in trouble. We've seen the 10-year yield of course, go from 1.5 at the beginning of the year to like 255 yesterday. We saw the 2-year yield yesterday go up, let's see, from around 228 all the way above 240. And the curve, of course, the 2s, 10s, is almost flat now. We also saw early in the day European yields spike a lot higher. And what we saw yesterday as well is the Japanese 10-year yield go through a 0.25%. And the Bank of Japan, they've been doing something called yield curve control for many years. Up until recently, they kept the 10-year JGB yield below 0.1. And now they seem to be losing control of it. And what is the Japanese yen carry trade? I'm going to put it succinctly, but you might also want to listen to Weston Nakamura's video. It's basically trying to keep the yen very weak by keeping rates at zero, by doing a lot of QE, and by discouraging Japanese savers. Japan is a huge saving country. Japan has an aging population. It's about 10 years ahead of us in terms of the baby boomers retiring. So there's a huge pool of savings. And by keeping Japanese yen bonds and other instruments at very low yields, it encourages Japanese savers to go abroad for yield. So they'll sell the yen they have and buy dollars, euros, and pounds, and keep our bonds here, elevated in terms of price and our yields down. And now with the central banks around the world, except for the Bank of Japan, reversing this policy, the Bank of Japan is becoming more and more important. And yes, Weston Nakamura has a good sense of humor, and he talks about the governor of the Bank of Japan, Haruhiko Kuroda. And Weston says if he ever breaks a sweat in an interview and shows any kind of nerves, that the whole world financial system could collapse. And it's crazy now, because I think in the video, Kuroda is being interviewed at the World Economic Forum back in 2016. And at the time, the Bank of Japan had 1/3 of all the JGBs, or Japanese government bonds. And the interviewer asked him, "Don't you think that's too much?" He said, "No, there's 2/3 out there left," i.e. meaning, we can buy as much as we want. And he saying that, laughing and like showing no signs of worry. And I think Weston now notes from his video last month in 2022 that the Bank of Japan is now up to 50% of all government bonds that they own, Japanese government bonds. And of course, the debt to GDP ratio of the Japanese government is like over 200%. I think it's crazy. So what's there to stop the Bank of Japan from carrying out this policy, this crazy monetary policy they've been carrying out? And especially now when the West wants to tighten, they have to kind of save the day. Well, personally, I think it's going to be reflected in the collapse of the Japanese yen. And I didn't cover this yesterday in the video because everything was moving very quickly yesterday morning. But it felt like the yen was trading like the Turkish lira, or like the Russian ruble at the beginning of the invasion. It was really collapsing. It's not something you expect from a major hard currency. And I also noticed, as you can see here, that the price of gold in yen made an all-time high around 240,000. So yes, there is a consequence Mr. Kuroda might be laughing and saying, well, we can buy whatever we want. It doesn't matter. We can have 100% of all JGBs. Who cares? But I think he's wrong. There is no such thing as a free lunch, no free sushi or sashimi, Mr. Kuroda. And eventually, the Japanese people, the savers, they're going to realize that their currency is going down the drain. And I think that's why we need to keep an eye on XAUJPY, which is the gold price in yen. And I think, unfortunately, this is going to happen to all major fiat currencies. The dollar will probably be the last one to collapse versus gold, of course. And yeah, like Weston Nakamura said, the West always keeps saying, the major central banks, oh, we're going to reverse this now. And Japan keeps them afloat. But eventually the West will have to reverse everything and do what the BOJ is doing as well. And that's when you're going to see a huge bear market in the fiat currencies. And the mirror of that, of course, will be the bull market in gold. Yes, it is frustrating to see what the fiat price of gold does in dollars, like yesterday, what it did. But don't forget, in Japanese yen yesterday, gold made an all-time high. And eventually that's gonna, when the Bank of Japan loses control, and I think Mr. Kuroda is gonna lose control of the currency. Maybe not the bond market, the JGB market, but the currency. That's where the problem lies. And specifically versus gold. And when that happens, watch out. And I'm looking forward to speaking with Weston to see how it has affected the average Japanese on the ground. And I think it has. It's kind of cheated the Mrs. Watanabe of the world. That's what they call, that's the name they give the Japanese pensioners, Mrs. Watanabe. I think in Japan, the wife usually manages the finances, but instead of maybe getting 3, 4, or 5% return on their savings in their own currency, they're getting nothing. And we're told, of course, that there's no inflation in Japan, but I can bet that the cost of living is not improving. It's continuing to rise. And it only hurts the general public. And who does it help? Well, it helps the same old suspects, the same old guys, the bankers in Tokyo, the bankers on Wall Street, the bankers in the city, the bankers in Frankfurt. Yes, unfortunately, the Japanese public is doing that. They're holding up the system. But I don't think it can be done forever. And yes, with that, let's quickly look at where the markets are this morning. And before I start, I will put a link to Weston's video up in the cards and in the description. I will also put a link to my video from about a week ago about the yen carry trade up in the cards and in the description, so you have a better idea of what the yen carry trade is. So, oh yeah, and one thing Weston said, it's not a matter of if, when the Bank of Japan can't keep this going. And by this, I mean, keep the Western system afloat by basically trashing its currency. When that's over, the whole Western financial system could implode, unless, of course, the Fed, ECB, and Bank of England and others decide to accommodate again. So that's where we are at right now. So it's 8:15 a.m. London time. We've got spot gold at 1923. It's basically unchanged. The high's been 29.60. The low has been 1919. I think yesterday the low was 1916. Silver is up 1 cent, so very quiet. The precious metals, it's trading at 24.89. High's been 25.02, and the low 24.80. The Dow is up 36 points, or 0.1%. The NASDAQ is up 15 points, exactly at 15,000. S&P futures up 5 points, which is also 0.1 at 45.81. FTSE is up 0.5% or 31 points at 75.11. Sterling is unchanged, just below 131 at 130.88. The euro is up 0.1% at 110.00. The dollar's down 0.25% versus the yen at 123.62. Just show you a chart of the Japanese yen. I mean, I've been noticing for the last couple of weeks that the Japanese yen has been weakening quite quickly. It's like they're losing control of it. And I think it's because they're keeping the whole system afloat, not just in Japan, but in the West as well. They're trying desperately to keep treasury yields, European government bond yields low. And the higher you see the dollar go against the yen, or the yen drop, it's more and more a sign of trouble. And why is that? Well, because we're seeing here the Bank of Japan encourage savers to get rid of their yen for higher yielding Western paper. And the Bank of Japan does that by saying that they're going to keep printing and doing QE and keeping JGB yields capped. And that's what it leads to, because the Japanese saver will sell their yen savings to get better return elsewhere. So as you can see here, yes, I was looking at this yesterday, and the yen is, you see here, or the dollar got up to above 125. I mean, it's a huge move for one day for the yen to go from like 122 to 125. It has stabilized for now, but I think that is a worry. That is what Mr. Kuroda is trying to probably not really talk too much about the weakening yen and the record high price of gold in yen. I'm sure he doesn't talk much about that with the press. Anyway, let's continue. The dollar is down slightly versus the yuan at 638.24. To the other currencies now, Aussie dollar is up 0.25% at 79.10, and the dollar is down 0.15 versus the Canadian dollar at 125. Kiwi dollar is up 0.2 at 69.05. To the general commodities, WTI crude is down slightly, just under 0.2%, around 105. Brent crude is unchanged at 109.50. High-grade copper is unchanged as well at 472.50. U.S. nat gas is down 1.5% at 546. So yeah, things are relatively quiet right now this morning. Again, they could pick up or go down or get more volatile by the time this video is posted. The 10-year yield is unchanged at 248. The 2-year yield is at some critical technical levels. It's breaking out a very long-term trend line in terms of, it's been going down for decades, and we're breaking out of a key trend line, which isn't a good thing. Right now, the 2-year note yield is up 3 basis points at just below 242. So I think it's just a matter of days until we invert, i.e. the 2-year yield becomes higher than the 10-year yield. And that, of course, usually is a bad omen for the economy, because it means that financial institutions' profitability goes down, because usually they borrow short-term paper at low rates and lend long-term paper at higher rates, and that improves their profitability. More profit the banks make, the more they will do business with the economy. But when that reverses, it's not good. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.